You know, I got to tell you, I'm still somewhat amazed how many investors think the stock market is just sort of a single entity. It's just stock market like a basketball. It automatically just goes up over time. Of course, they've been told just put the cash in, right? And like Ron Propel, set it and forget it.
I'm going to walk over here and I'm going to put it in the machine. You saw how easy that was. Now look, I'll just put it in this machine over here. I'll slide it back and set it and forget it.
Set it and forget it. It's easy, right? Well, it takes work and a lot of trading, really, to keep engineering the market higher over time. And we are going to discuss portfolio rotation and the magic, by the way, of the S&P 500, because on March 4th, 1957, the S&P 500 began trading. And it was just, look at this, it was 425 industrial names right back in the day, 25 rails, 50 utilities. Of course, today it looks a lot different. It's 504 stocks. You've got 11 sectors, still a lot of industrials in there, but a whole lot of other things that really reflect the economy. And listen, they do these aggressive quarterly rebalancing. Remember that every 3 months they're making changes. They find some great names with strong upside potential. Remember back in September they added Hood, they added AppLovin and MCore. These names are juggernauts. You made a bunch of cash if you just bought it back then. And then of course yesterday they added Comfort Systems, CRH, and Carvana. Carvana, right? The meme stock darling. Just a couple of years ago, the smart money was dancing on their grave, or at least so they thought. No, it's really sort of a crazy twist because it reminds me of the line from the Police, that song, Wrapped Around My Finger. I'll turn your face alabaster when you find that your servant is your master. Everyone's upgrading this stock right now. Every single day, these Wall Street firms. But the moral of the story, folks, is that you're investing in the market of stocks, right? And there are changes that are being made. Even if you own an index fund, an ETF, a mutual fund, changes are being made. You are, to a degree, an active investor. So don't downplay the benefits of knowing when to buy and sell for yourself. I want you to take control of your portfolio because I can tell you right now, this is an amazing time to be in the market. And by the way, the folks at the S&P, they were late on Robinhood. They were late on Carvana. You could have been there much sooner. So with that in mind, I want to bring in one of the best on the street, Crossmark Global Investments. Their chief market strategist is Victoria Fernandez. And Victoria, so, you know, they make these changes every quarter.
Yes.
I want to get a sense from you how active you are. Like, how many trades? I know a lot of things go into it, but on approximately.
Yeah, well, when you're looking, obviously, if it's an index strategy, we're going in and making those changes immediately to match what we're seeing in the benchmark. But in our active strategies, we're trading every single day. We're in there, we're looking at our models, we're tweaking the holdings. So yes, we're gonna make changes on a quarterly basis to match the benchmark because we do have risk parameters around that, but we're in there every day.
Right, and I mean, that's the moral of the story, right?
Yes.
A lot of people have been told, don't trade, just hold these stocks, you know, and then of course, you know, at some point people kind of regret that maybe they didn't take some off the table here, some off the table there. All right, I know you're focused on a softer economy as we go, and you're a little antsy about these things. We've got a lot of things that you're watching. How does the weak ISM and the Fed uncertainty, the labor market, all of this, how does this influence or inform your decision making?
Well, it's telling us that we need to be a little bit cautious about what we're seeing out there. We have these tailwinds in the market. You talk about them all the time. But there are these elements that say, wait a minute, there is this softening in the market. There's things we need to be watching. Here's a list of some of them. And we need to be watching when they start to turn. And I think that's the important part that perhaps we're starting to see right now. Are some of these elements starting to turn to give us tailwinds into 2026?
Those are your sort of buy signals. So they accumulate to become a buy signal. And you know you have something really interesting. I'm going to put it up here for a second. A comment you made, the strength of the consumer is tied to the labor market, which is tied to earnings.
Right.
So they're all intricately. So what are we looking at? So we should be watching the labor market. If the labor market is getting weak, why does Wall Street think earnings are going to be higher?
I don't know why they think that because it should be the other way around, right? Watch earnings. If you've got strong earnings, strong profit margins, then you're going to be supportive of the labor market. And that's what you want to do because that's driving the lower income consumer is their wages. So that's important.
Let's talk about how to make money. We've got less than a minute to go.
Yes.
You've talked about Schwab, McDonald's, you talked about the consumer, but Gilead is really your focus today.
I love Gilead, not just because we've seen the healthcare sector turn around. They have strong fundamentals, and your Making Money viewers know we like the stock, right? 18 times, it's got a 2.6% dividend yield. But besides it being a strong fundamental stock, Today, Gilead announced another $3 million from their foundation to help get access to medicines for breast cancer patients. So they are not only a strong fundamental stock, they're doing good work for people, and we like that with the values-based component of our strategy.
I think a lot of people don't realize it, but your firm is really big on faith and initiatives and those things. And by the way, they're rewarded for it.
Yes.
It's so great.
Thanks so much, Charles. Appreciate it.
All right.